Welcome to the latest Savings Guru podcast. I'm delighted to be joined by someone who I've spent some time working with and enjoyed immensely, Tim Coates, who is the Chief Customer Officer and one of the co-founders of Oxbury Bank. Welcome, Tim.
Hi, James.
Thanks for joining us today. For those of listeners who don't know you, tell us a little bit more about yourself and Oxbury. What made you set up the bank and your kind of journey so far?
Oxbury's journey is probably about 3.5 years long so far now, and it actually began with my two co-founders, James and Nick, who were former Bank of Scotland colleagues back from the 90s. They bumped each other on a train back from London to Cheshire. So Nick was at the time doing an earn-out, having sold his previous business to Relex PLC, and that business was a agricultural sort of software and IT integration business. And James had just left another new bank called ClearBank, where he'd been the initial CEO who kind of took that through from a sort of sketch blank piece of paper kind of situation up to an authorized bank. And he felt he'd learned quite a lot about how that works well and what doesn't work so well in that process. And they kind of got to reconnecting and talking and suddenly realized they were sort of thinking some similar kind of thoughts about banking and about agriculture. More practically, the whole Oxbury thing got going in January 2018 when I was then on board, and I was sitting in my spare room and I started writing, doing that first bit of putting pen to paper and writing the business plan. Sadly, I'm still in that spare room right now. They're looking forward later in the year, hopefully, to getting back into the Chester office where we're based. Yeah, so 2018 was sort of was our year of scoping, writing, planning, modelling, raising our first Series A capital round, getting our application submitted at the end of that year to the PRA and the FCA, and that saw us authorised at the beginning of 2020 with another capital round, a Series B, and then 2019, I suppose, was really our mobilisation. Sorry, 2020 was really our mobilisation year. We did a Series C investment round at the end of that. And that was an investment round done entirely over Zoom and other such tools. I would not recommend that in any way, shape, size, or form. It is exhausting in the best of cases using Zoom for meetings. But if you're trying to persuade people to part with their money and get behind your vision, it's a tough gig. But we got to become a live bank from the start of this year. We're lending to farmers. We're taking deposits from those wanting to back that sector of the economy and everything that's important about it. So that's sort of how Oxbury's got to here so far, yeah.
It's a long journey, isn't it? I don't think people necessarily appreciate how long it takes and that average time to get from the kind of initial meeting to the regulator to being live in the market is increasing, almost certainly year by year and almost month by month. It's great for consumer protection perspective, and should be reassuring to savers, particularly that the amount of work that has to be done. But it's a long process to be involved with from an individual standpoint.
Indeed, and I probably should quickly declare the sort of the kind of conflict of interest here, which is that it has got a bit longer in the past years. I'd say the glory days in terms of the most efficient process that probably somewhere around sort of 2014 to the end of 2017. I may or may not have been responsible for running that process at the FCA at the time. And that's how I got to know James, which was through the ClearBank project. So I was the sort of authorising officer at the FCA for that, amongst other new banks, some of which are increasingly becoming sort of, if not high street banks, but household names.
You've teed me up nicely there because you've kind of touched a bit on there, but you've got a really interesting background with farming, banking, and regulation, haven't you? Do you want to tell us a bit more about that?
Yeah, sure. Some days I'm never quite sure if I'm a farmer who became a banker or a banker who happens to be a farmer. And somewhere in there, there was a regulatory journey. The thread is sort of, to some extent, quite typical of someone from a farming family, in the sense of initially I had to make a career away from the family farm, and again, sort of an obvious place that people quite often go off and make a career in the UK is in professional services and typically finance, and I like many others went to the city. That wasn't long before the financial crisis then came and hit, and the sort of that leaves its mark, much like I'm sure this current pandemic crisis will leave its mark in terms of how people think about their careers. And that was true of my sort of farming background, being on a family farm, and you get to you get to think about like the big picture, I think, at quite a young age when certain things happen. I as a child lived through the BSE crisis, 2 bouts of foot and mouth crisis. And, you used to hear a lot of conversations about things like, the exchange rate mechanism and global trade policy, the sort of things that some of us have got quite used to hearing a lot about thanks to Brexit. But it's sort of always sort of part of a farmer's life because, being the sector that none of us can do without, we've all got to eat. It's a highly liquid global commodities market on with one lens on. And, big changes in things like trade policy, impact the farmer on the ground. So that kind of sense of what's going on, I think, has probably given me what I call a curious mindset. And I think working as I was then in the city, and I was doing sort of corporate and financial and political communications when the crisis came, and I had a few financial services clients who some of them weathered it better than others. And again, there was quite a lot of, well, what's going on here? Thinking that I was doing, and after a few years in consultancy, I took a bit of time out and went and got a master's in financial economics, just to I really wanted to go back and get another qualification, but I also wanted to give myself the space to think about some of those things that had been going on and happened. That then led me into joining the FCA, which again, as a slightly selfishly, I took as an opportunity to get that kind of industry-wide perspective about some of the things that were going on in different aspects of financial services. So I was there for a little over 5 years, I think, once it all added up. And it was a good point to be joining because I joined in to work initially for Martin Wheatley as he came in to be chief executive, the first chief executive of the FCA. But I spent most of that time, as I've already alluded to, as the subject matter expert on new banking, which was a great time to be doing that, given there were lots of people who wanted to start banks at that point in time. I think the regulatory framework change definitely helps support that, and it can continue to do so, I hope. There's other big factors at play that make that possible. The financial crisis itself being one of them, but also then technology change itself has also been obviously a crucial part of making that journey possible for us and for others. Finally, to wrap that up into again me joining Oxbury, I guess at the FCA, while I was there, it gets a lot of criticism for a lot of things. It's quite a good place to work. One of the things it's quite good at is understanding flexibility in working. And I think, that's again a trend that I think has been talked about a lot in the past year. So I actually went down to 4 days a week from 2015 there. And the reason I did that is because I was part of a succession planning exercise for the family farming business. And that challenge of succession is a big one for farming businesses in the UK presently. The average age of a farmer is 59. So I've been through the complexities of that exercise, which means that as well as my role at Oxbury, I am now the manager of my family farm now, which is it comes with its own set of challenges and responsibilities, but also keeps me really, really connected to the day-to-day challenges being faced by the target market of Oxbury.
I think it's a fascinating background, Tim. You've got gives it particularly. From an Oxbury context, you've kind of got a lot of the holy trinity there, haven't you? You've got the banking, farming, and the regulatory piece. It's a pretty unique background. I can't think of anyone that's got can rival that combination.
Yeah, well, it led to this sort of bizarre situation where how that all come together, and I'm suddenly joining James and Nick. Well, as I say, they had their meeting on the train. And James said something to Nick like, "Oh, well, we should just go in and just throw the idea in front of the regulators, just kind of see what they say." Oh, there's this guy Tim there; he seems to be pretty switched on. I'll just give him a call and set something up. So they did, and they came in, and I was there with another FCA colleague and a couple of colleagues from the Bank of England. And it became one of those, more bizarre meetings I've ever had. It's sort of mid to late 2017. I know that I'm going to be leaving the FCA in my head. I've actually handed my notice in because I'm thinking about, okay, I've got to take on the family farm business, but I'm going to have to do something else as well on the side. So I was sitting in this meeting and I suddenly found myself sort of translating particularly to my Bank of England counterparts, what things like agricultural charges are and what seasonality of cash flow looks like in dairy and arable farming, and things like why farmers are typically actually really good security. I suppose it's one of those, I think other people talk about it as like I'm on the wrong side of the table meeting. So given I was already on out the door anyway, so it didn't take too long for James, Nick and I to sit down and agree and get on with taking this proposition forward. And after that Christmas, off we went.
And the proposition came to fruition towards the end of 2020 from a lending perspective, and from a savings perspective, at the end of January this year, we started to take savings from farmers, and then earlier in February from personal savers. What's the early feedback been like?
We've had a really engaged group of initial savers who've actually, they've offered quite a lot of really helpful feedback, particularly around our application process, the onboarding experience, and what using our online banking and mobile app is like. One of the things that we've done is we're using what's called passwordless security for our multi-factor authentication. It requires a bit more of a complicated initial setup than some other security approaches, and it could be a bit confusing to some people, and you do need a vaguely recent iPhone or Android device to use it. But we think that the security benefit of having that in place, and actually crucially for the customer, it's very hard to then go and be phished because they don't actually have a PIN or password to give away to a malicious actor pretending to be us. So it's, I kind of think that it's the kind of approach that we all see increasingly. And I don't know about you, but I have to use a password manager to use everything else, and which means I kind of don't even know some of my passwords. Good protection for me occasionally means that things can be an absolute nightmare. I ended up locked out of a nationwide current account for the best part of 6 months once, having got the passwords all a bit jumbled up. So yeah, I think we're being an early adopter on that, and it is not for everyone. There are a few people who've opened some accounts and gone, actually, I just think that this approach is a bit too confusing for me. We're sorry to see them go, but it's still useful feedback for us to think about how we can bring that forward.
Do you find some of the customers are saying that actually they're kind of reassured by the high level of security?
Absolutely, we've had that, and we've had some people who say actually, it's actually, we've given a very detailed, guided set of steps of how to set it up, and they were sort of like, we've had some feedback saying it's so welcome, but actually we've probably made it, it wasn't as hard as we're trying to explain it as being, almost, because we're so keen to make it easy for people because we know it's a bit new. But we've had some genuinely good feedback about, people really like it, and again, once you actually done the setup, the use of it is really easy. And that feedback is crucial to how we evolve our proposition. A bit buzzwordy, but we generally use what's called the agile methodology for running everything internally in terms of constant improvement. So, from this initial feedback, we've already done some minor tweaks to our application forms, the website, the online banking, just to reflect what we've been told.
Yeah, at the moment you're only open to personal and farm savings customers. Are you intending to expand that out?
Yeah, absolutely, we are. So we're only doing individual personal customers right now, but joint accounts is coming, in a matter of months. So hopefully that'll be in place for midsummer, just as we all stop having to social distance. And we are doing business account for farm businesses at the moment, and we're a farm first bank, but we're also a bank for those who want their savings to have a purpose, i.e. supporting British food production. So that's the general saver, but obviously there's a whole wider agricultural ecosystem of businesses and individuals around that who we are starting to roll some things out for. And actually that's something that any business can actually currently apply. We will accept them. Our rates for the farm business are structured as sort of in two component parts. We have a standard rates, as it were, which essentially are just business savings rates, and then we pay a farm bonus rate on top to active farmers to ensure that they're getting guaranteed market leading rates as a result.
How strict are you then on that farm bonus? Because obviously there's a number of businesses that support farms, and in the agricultural sector, kind of where do you draw the line there in terms of who gets the bonus and doesn't?
Fundamentally, is the business's core raison d'etre to do with agriculture? So there will be some who have a very wide remit, and actually agriculture is a very small part of it. They're probably outside of that. There are others who are clearly, even if they're not actively farming, they are absolutely in that. And, we've had some of those queries come in already. 9 out of 10 of those, they're going to get the bonus rate as well.
That's good. Let's look forward to the future then. You've mentioned some of the things that are coming down the pipeline in terms of joint accounts, etc. Do you have any plans for anything new or innovative in the future that's coming down the pipeline? We've
briefly touched on things like doing joint accounts and extending business accounts that are currently available to sort of sole traders, partnerships, limited companies to take on other entities. So cooperatives, charities, trusts, other structures. We're actually looking at the moment about how we can put a specific proposition out there for the young farmers associations, which are out there to support their financial future. It's really important to bring the next generation of farmers on. And also, if we can do work around the many small and national agricultural benefit charities, keeping our focus there. I personally have some quite strong views that the savings market and retail banking in general is not always that innovative when it comes to product innovation. So built on our sort of technology approach allows us to be more innovative. We haven't really talked about it in this conversation, James, but our lending proposition has definitely been enabled by that. And, we want the savings proposition to be as well. And we think we'll do that in a way that, the likes of the large high street banks just will never get around to prioritizing. One of the first things we're kind of doing as a proof point in that to show that we can do something a bit different, and that also, is to fundamentally talk about the point is that we're a company with a purpose, and we want our savings customers to be saving with us for a purpose. Is we're launching a product later this month called Oxbury Forest Saver. Forest Saver is a savings account which is designed to be non-consumptive. And what I mean by that is we are using the interest accrued by our savings customers to directly fund the planting of trees on British farms. So native species being planted across the UK, following the mantra of the right tree in the right place. Now, there's been quite a lot of things where you see, open this account, we'll plant a tree. That's not what we're talking about. We're talking about the direct link between people being able to sort of put their money to a really important initiative and purpose, and that it's done in a fully auditable way, such that it's really clear how the choice to save delivers a real proper carbon mitigation. I'm not a great fan of, as I say, of the kind of things which are tick a box at the end of your booking a flight and we'll somehow go off and magically offset this. But that's just behavior as normal. We're trying to actually get behavior to change. I think most people now are aligned to the fact that there is a requirement for behavior change and personal action and corporate action and government action to support the agenda on climate change. Without getting too moralizing about it, there's a real imperative here to act. And I think the best way that markets will move is when individuals take action. So we're offering the ability, from this month for people who are concerned about doing something to mitigate their climate impact to they've got a savings product they can open, which like any savings product, your savings will be safe and your capital will be returned at the end of the term. But rather than seeking a simple financial return, we're actually saying, this is making an investment in the future and making a difference on, environmental impact, right now.
You're talking here then a much more personalised approach to actually being able to offset your kind of personal contribution to the world.
Yeah, exactly. So if you go to the Oxford website and it's all the information is already there, we'll say that for example, save £12,000 in Oxbury Forest Saver on it's a 1 year fixed rate bond, and that would mitigate the climate impact of the average UK citizen, which is that's based on the calculations made by the WWF. Again, you can go to the WWF calculator, calculate your own footprint and save whatever is appropriate to mitigate your households, or your 20-year career flying back to Singapore every now and then, whatever it is you need to you think you should be mitigating. There's a way of doing that straight now, and it's the direct link to funding. I mean, it was the budget yesterday, and of course there was a green savings bond announced by the government. I'd like to say it's a great initiative, and I'm sure it is. The skeptical part of me is actually, if you're putting it into something like NS&I like that, it's a bit of an accounting trick. Who's to say that you will be able to draw the link directly between that savings and that approach, as in what will actually be done with it? I think there's so many other levers that the government are pulling that how can you ever say that it's the retail savers and NS&I that made the difference? Whereas our approach is identifiable tree planting projects on British farms that are fully wood and carbon code compliant, delivered with industry leading partner to deliver. And it's fully auditable, and push comes to shove and you say, I've saved with Oxbury, where are my trees? We can say, go there. You made that happen there, which will have this impact over time. And I think that's really important. I'm a great believer in individual agency, and I think there is an appetite, and I see clearly the Chancellor agrees with me that there is an appetite for people to go and save with a purpose and save to support the transition to a low carbon economy. But again, I think what people want in that is clear accountability and transparency about how that's being delivered.
It's going to be interesting to see what the details are when they kind of come out on the green savings bonds.
Yeah, and actually, the thing about, again, doing Oxbury Forest Saver, and if the green savings bonds do things like, I'm just going to pluck this out of thin air, but if they're suddenly like, actually, that means we're able to expand our offshore wind capability by X amount, great, I'm all for it. And that's important. It's obviously very important. Something like Oxbury Forest Saver has additional benefits apart from just the climate mitigation. The big thing it's doing is again, and this is through our partnership selection and the point that we want to get this moving across the entire country. It's about, frankly, restoring as well as maintaining the biodiversity inherent in our ecosystems. That's about air quality. That's about water quality. It's about species mix, which includes genetic mix, which builds resilience. I mean, a lot has been written over the past year about how the pandemic we're facing now is about over encroachment into ecosystems. It's generally how viruses come forward. We need to support what has already been a depleted biodiversity. And again, this is a kind of project which we can put, out there right now and say, if you believe we should be supporting our natural ecosystem defenses to support our planet's future, it's available for you right now. It will support jobs in the forestry and the farming industries, which is obviously also really important for the rural economy.
I agree. I think it will be interesting to see that kind of detail. I think I agree with you. Applaud sort of any efforts to work there, but looking at the kind of detail of the budget yesterday, particularly around NS&I's targeting, although the green savings bonds are going to be outside of that, looking at the overall tone of where that's going, it doesn't suggest that the volumes or the rates on offer on those green savings bonds are going to be looking to attract a particularly large volume of savings in. You kind of wonder, therefore, whether it could be a bit more gimmicky rather than actually designed to have a real impact. It will certainly be interesting to compare.
I will reserve my judgment until we see the detail, right? But I'm thinking right idea, but a lot of it's in delivery. And have we necessarily got everything perfect with Oxbury Forest Saver? Well, we've tried to, but we will continue to evolve that product as well, and we will be, because that's what we can and we will do.
We touched on your background earlier with the regulator, and it's a bit hard to kind of ignore that you mentioned that how busy it was at a time when you were there. I think we're at 32 newly authorised banks, with Cash Plus being the latest to get over the line. We've also seen Bira Bank acquired by Lee Bushell's investment group and rebranded as Birmingham Bank. We both know there's more banks in the pipeline. Do you think there's room for those that are coming?
In short, yes, I do. I touched on it a bit before, but I think this is the story of technology enablement. And I think what the approach to tech and now obviously fintech has meant for Oxbury is that we've managed to build everything we need pretty much from scratch. Our approach has been we basically co-developed our core banking platform and all the functionality around it with a specialist, what's called a low-code provider. So that's built on a low-code system, which is a bit sort of like the way it's been explained to me best is it's sort of like rather than having to rewrite every line of code for everything you do, there's very much an ability to replicate quickly and efficiently. And we've done that, cloud native, built the entire thing in the cloud from scratch. And others can follow that sort of strategy. And it means that you can bring propositions to market that are more specialist, that are more niche. And again, I think like us are banks that are trying to have a clear purpose and make an impact against that purpose. So I know almost nothing beyond what you've already said about Lee Bushell and his plans for Birmingham Bank. But in that sense that, it seems pretty clear what the intent is to inject an idea of regional banking, something that, I think has been seen to work in other countries, less so in the UK. I mean, not at least in recent decades, but I think actually that is completely possible. But I also think that sector specialism, like Oxbury, is important. I think people know and understand the people they are serving. That's really important. It's how do you get people to be best at what people do, which is forming relationships and really understanding the characters that drive businesses, and how do you get technology doing what technology is best at? And there are obviously some interesting overlaps. Things like credit analytics is somewhere which sits sort of where those two might meet. But Oxbury's approach is very much we use the technology to get people away from having to do the sort of mundane tasks and the administration, such that we can put more people into, customer facing roles, having informed discussions, particularly on the farming side with people who really understand the intricacies of the variability in farming businesses.
It's a really interesting point you make there about sector specialism and you talked about other markets. I mean, Germany's obviously a really good example of where regional banks have worked very well and dominated. We certainly seem to be going down the route in the UK of sector specialism or lending specialism. Birmingham will be interesting because it's first one to look at specific regional.
Yeah, and as I say, you and I are both aware that there's a couple of others in the pipeline who are looking at other regions in the UK, right? So, and again, I'm very for that. We've founded Oxbury up in the northwest in Chester. It's a great part of the country. It's nice to have a non sort of London metropolitan focus. We don't, unlike a lot of other the new entrants, have a sort of we're not into the property-backed SME finance space in quite the same way as others. SMEs in particular, but the wider lending and consumer markets will also benefit from that trend, I think, as long as it continues.
While we're on the crystal ball gazing, obviously the savings market's changed massively in the past decade with all the new entrants. What do you think we're going to see in the savings market in the next few years?
Well, as I've sort of already hinted at, I think what I'd quite like, and I'd like it to see, is that it should be recognised that money talks, and I think that the savings market could be looked at as a way of individuals voting with their funds on this giant liquidity pool that supports the change they want to see in society, support the social and environmental challenges of the coming decades. Clearly, we're trying to do that with Oxbury Forest Saver. We've got a few other thoughts in the pipeline about how we can do that on some things to do with supporting the society that exists in the rural economy as well. So I hope to be talking to you about that in coming months, James. We're in this, and have been now for some time, this low interest rate environment, and it may yet get lower. And once we get into that world, really in the longer term thing, which I think we will, certain other types of banking models that exist sort of elsewhere but not really here in the UK start to become quite interesting. So I'm sort of talking about the SME banking principles that the We Bank in Switzerland have, which is essentially a sort of economic circle of SMEs that essentially sort of pool liquidity amongst themselves. And it works at low interest rate environments in terms of setup, but can survive if it's at scale, if rates go up again. A similar principle exists throughout the Nordic countries on the land labour capital movement there, JAK banks. I'm not aware of anyone proposing that particularly in the UK at the moment, much in the same way that no one suddenly sprung up and said, I've got this really great new building society idea, because it's the same kinds of challenges, right? I think we're getting probably into a bit of philosophy of political economy here a bit, but I think, we are going to start to see a changing appetite, I think, both from as a result of the low interest rate environment, the impacts of the pandemic, the challenges of climate change, the challenges of inequality in society, that I think means that private finance, and that's how we get back to what's going to happen in the savings market, the idea of what a return is on your savings, that question is up for grabs. And I think that's where I think we're going to see a lot of interest in the coming years. And the big question we're all waiting to see what happens is all things being well and the vaccine program being effective and rolling out and the economy reopening again, is, are we going to see, for those the top 3 quintiles of the UK economy who have got more savings now than they did before the pandemic, is that going to have a wealth effect? Are people going to be like, glad I've got that, hoard it down to some degree, or is it going to be an income effect? Are people going to go out and spend it? In America, where their approach was a bit more of a helicopter one, that all went a bit differently. Already they've seen that some people go, I have no idea what to do with this government check. I'm going to go on Reddit, and before you know it, I'm buying shares in this thing called GameStop. Strange things do happen. I think here, the NPC members all seem to be getting up and making speeches about it at the moment. I'm not even sure they know quite what's going to happen. They've got some good theories, but I think they're kind of broadly thinking it's a bit of a wealth effect. So that means the savings market is going to be bigger than it has been, and to some extent here to stay. That for those of us already as banks in that market, that's an interesting question for us to deal with. There's going to be quite a lot of liquidity out there. with my economics hat on, doesn't lead me to think that, again, strict returns are necessarily going to be the order of the game. Obviously, we all need to save at different points in our lives for different purposes. But what is it really doing? Is it having a difference? Is it making a difference? Is it having an impact? As well as meeting those core things that I need from a savings account: reliability, ease of access, and security.
It's really interesting, isn't it? I think if you were a cynic looking at the market, you would say, despite all this activity from new banks, 80% of the savings market still sits in the place it always has done. That the new banks have effectively taken some away, but have largely also taken sort of the growth of the market as well. So structurally, it doesn't look that different. So you could argue that interest rates haven't made that shift. Will moving more towards the impact of what your savings do, and looking at it from that particular low rate environment, could that have an impact? It would be really interesting to see.
Yeah, absolutely. And this is why actually, as a practitioner in the savings market, it's why it's such a fascinating thing to be doing, because the savings market seems to exhibit both extreme price elasticity and inelasticity at the same time. So there are a cohort of consumers who are following a 1 basis point change in rate. But then there's a whole other much larger swathe who doesn't matter whether it's there, and I'm just going to pick them at random, HSBC are paying, 0.1 or 0.01 or 0.001 or nothing. They still don't move the money. So it's not as simple as saying that everything's driven on the price anyway. Currently, we've known that for a long time. The ongoing debate sitting in regulatory circles is there should something be done about back books? That is a question that has not yet been fundamentally answered. I have my own personal views. I kind of think that maybe it should, some more should be done there, because we're talking about trying to ascribe one behaviour to a whole set of individuals who are savers, and as I said, people have different requirements for their savings at different, if they have any, at different points in their lives, and different circumstances. And to some extent, again, with greater specialism, is that there should be the ability for providers to come in and provide products that are suitable at all of those junctures, right?
I think it's been a fascinating market to be in the last 10 years, and I don't see that changing. I think there'll be different things that will make it interesting in the coming years, but I think it's going to be an exciting place to be still. I've got to ask you, because I ask every guest this, if you were the Chancellor for the day, particularly timely given Rishi did the budget yesterday, what's the one change that you'd make that benefits savers? So
I'm not sure how you'll react to this one, James, but my change actually is as I would abolish NS&I.
Okay. Oh, I like this. This is an interesting take.
So I think it distorts markets. I think people rush to it because it can outcompete, and then they get fed up when it doesn't meet their expectations. That might be sort of betraying the fact that I'm sort of generally in favour of the fact that we've got a reasonably well functioning, as you and I say, private provision of savings accounts out there. I don't particularly think there's a need for it anymore. And more specifically, it's got a monopoly on prize-linked savings accounts. So through premium bonds. So the legal hoops you have to jump through, and we've looked into this, to go into that market. And I know there have been some people who've found some roots in, like Halifax and the Family Building Society. But it means that competition around that kind of product innovation is not what it should be. If you look again at other jurisdictions around the world where they have been able to bring those products to market, they're really popular and they get quite competitive with each other. And again, at the lower bound interest rates, it's something that I think should be actively considered. But whilst premium bonds are sitting there and again are legally protected in their position of being there, it's going to be hard for people to justify the innovation in that space as well. So overall, I kind of think that you'll be the expert on the history of NS&I, but from my point of view, I just don't think it has a place in the modern savings landscape, and it will never be able to deliver the customer service that a private institution can prioritise. That latter point, we've certainly seen the evidence of that in this past year, and even if you allow some sympathy for NS&I as an organisation because of the fact that the pricing decisions have been driven by Treasury clearly. I think what's clear is that
they haven't been able to operationally gear up in the same way that other banks have been able to respond.
I've also said they're a bit distorting, but of course, actually, sometimes they're just like everyone else, though, as well. So, much like the high street banks, they're also got things out there paying 0.01, and I think that's I think the message of that should be pretty clear, which is we don't want your money. And if you've got the government entity saying that, it makes it all the more easy for the high street banks to say the same thing.
I think what's interesting this time is certainly looking at the numbers, and we'll know more next month when their annual results are published. Is there actually looks like there's been a strong backlash to the rate cuts, and a large proportion of the funds that are on those products at as low as 0.01 are actually moving, and the only numbers that appear to be growing there are the premium bonds, which you mentioned. I mean, that's a fascinating piece, because arguably you had what was effectively a state-backed bank now that is a prize saver provider that does a bit of banking as well, because premium bonds are now by far the most dominant product, account for more than half of their business. Do you think it's going to happen then, Tim? Go on. That's
do you think it will?
Did you see it happening?
I think I'm slightly dreaming. I'm afraid, but and clearly they've again, as we saw yesterday, they've gone. We want to do something in this space. They'll look to them rather than look to the private market, which I think is maybe I should have put a few more phone calls into the Treasury in the last few months and said what we were planning. I don't know, but. Woulda, coulda, shoulda. I was busy launching a good proposition.
Yeah, I think you're probably in dreamland there in terms of whether it could actually happen. I can't see it going anywhere anytime soon. But I agree with a lot of what you said there in terms of its distortion in the market, and whether the need for it exists. It certainly has a monopoly on the prize saver market too. On the other hand, I can never get away that it was the first savings account that I had was a national savings one when I was a kid. So my starting point in the savings world, if you like, was via national savings. I think there's a fair bit of that in play with it as a brand, as an emotional attachment for a lot of people from my age upwards, particularly.
No, absolutely, and as I said, I was never denying that it hasn't had a point and a purpose at times in its history, and
hugely.
But whenever someone puts together a museum of savings, I hope to see it in there as a museum piece rather than something that we're still talking about.
That point that may be coming sooner than you think, actually. So that's the conversation for another time. Tim, it's been an absolute pleasure to talk to you today. A really interesting set of conversations on a wide variety of topics. So thank you very much for joining and sharing your thoughts with us and telling us more about the Oxbury journey.
That's no problem at all. Thank you very much for having me, James.